Facebook face off in the mountains of Switzerland today. Ad mogul Martin Sorrell and one of Facebook's earliest investors, Jim Breyer, taking very different stances on where shares of Meta are going this year. Take a listen.
I think you'll see Meta come back extremely strongly this year on the back of Reels and Business Messenger, so to deal with the competition from TikTok and other short-form video competitors.
My view is over the next 24 months, there will be a big rebound, but they're going to be under a lot of pressure for the next 12 months. And they're not cutting costs fast enough, in my humble opinion.
So who is right? Steve.
Well, the stock has bounced pretty aggressively and has closed that gap from earnings where it fell off a cliff. The question is what we've all said on the desk. What is the metaverse? Does Zuckerberg know what the metaverse is? What's the spend going to be on metaverse? That's the growth engine. But what they have to do is talk more about the core. We've had the headwinds from Apple privacy, the headwinds from TikTok. I think the stock has just shook off a lot of that. It was public enemy number one. I think DC has a bunch of other fish to fry right now. I think you could probably move higher here, but definitely needs a rest. I'm actually still long the name. I intend on staying long.
I mean, I think a lot of the downside has been de-risked at this point, and the bull argument is really around valuation, which you can't really argue against, and it's really the tale of two cities. So I look at this balance sheet, I look at the financials, right, and you look at debt, it's like 1x free cash flow. You look at sequential revenue growth year over year, quarter over quarter, and really you juxtapose that with what seems to be frivolous and irresponsible spending in the short term. And so really, as long as they can get that capital discipline reined in and actually let us know how they plan on deploying that capital and what are the relevant KPIs to determine whether or not it is actually effective spin, I think that is when the stock really starts to turn around. But the debate is really about whether it's a 12-month period or a 24 to 36-month period. But I think a lot of the downside has been de-risked at this point.
When you refer to frivolous spending, what are you referring to?
I'm talking about billions. What is it? $10 billion on the metaverse?
No. But some people will say that is
40 billion. Sorry.
Yeah. The degree, the magnitude of the spend is frivolous, or the spending on or metaverse is frivolous.
The rate of the spend, when you compare that to where free cash flow is, to me, is a bit frivolous.
So I think it was October 27th. The stock traded 220 million shares. It traded 23 million, by the way, just to give you some perspective on that today. And so the dynamic when Zuckerberg came out, it was almost a mea culpa. He's not going to do that. And a lot of people said, oh, if he does that, if he reverses field in the metaverse, the stock's going to sell off even more. No, the stock's going to rally. And what Facebook has been doing quietly and not going out there and saying is what every other corporate is doing and trying to get rewarded for, which is to focus on the bottom line, not the top line. So I think it goes higher. I think this is an environment also where they have more ammunition and noise around what they need to do. Everyone else is cutting costs. This is what they need to do. The stock will be rewarded. Their core business, not so sexy, not growing. 2.2 billion people in terms of that platform. It goes higher.
They've pivoted to a business that they can't explain and nobody understands, which is problematic. To Bonawyn's point, spending money hand over fist doing it. That's not good. Stocks rallied 60% since the level Tim talked about, which is great. Problem is, this level is where we bottomed out from, if you go back and look, in March of 2020. So into earnings, I believe, on the first, on a backdrop where ad spend continues to go down, I think you're actually looking for a place to take profits rather than to add to longs.